Sadly, this thing is so damn broken, and Trump got handed such a bag of shit. Do you know what I mean? That I don't think Jesus Christ himself could fix this thing. I just don't. I think the damn thing is broken, and what I'm terrified of is that it's going to be broken enough that in 4 years the blue team will win because the voter not fully understanding everything that's going on. Tends to think. I mean, if you look at a series of elections here, what have the voters done? They've thrown the bum out. Yeah. Do you know what I mean? There hasn't been a two-term president for a while. I think it was since Obama, right? So, my sense is if things don't get better in 4 years, they're going to throw them out, and we're going to go, massively socialist. I do. I mean, I can't guarantee that, and I don't want to be, a scaremonger or doom master, but I'm trying to look at historical precedent. And, there's a lot of leverage in the system, and it's different this time. It's not 2008 where the leverage is in the housing and the banks. Yeah. The leverage is more with the hedge funds and the basis trade, or, just generally speaking, in the economy. I mean, consumers are very leveraged. I mean, credit card debt is extremely high and very expensive and climbing rapidly. The government is very leveraged. I mean, that's probably the biggest point of leverage. And, in government interest expenses, and we've got this whole fiscal doom loop thing going on where, we have to borrow more and then rates go up and interest is higher and, so on and so forth. So yes, I mean, in every case is different.
The global financial system is hanging by a thread, and this time, it's not the usual suspects. What's pushing us to the edge? Tariff chaos. Picture the economy like a giant game of Jenga, where every reckless move could bring the whole structure crashing down. But here's the twist. It's not just housing bubbles or failing banks this time. The real danger is lurking beneath the surface. We're talking hedge funds taking massive risks, consumers buried under mountains of credit card debt, and governments spiraling into endless borrowing. These aren't just warning signs, they're ticking time bombs. And experts say it's no longer a matter of if the system collapses, but when. Larry Lepard, a respected voice in the financial world, warned, "This could easily spiral out of control." The cracks are already forming. Unlike 2008, where banks were the weak link, today's threats are hidden deep within leveraged trades, debt-ridden households, and unsustainable government finances. And as interest rates rise, so does the pressure, fueling a vicious loop of debt and desperation. The system is cornered, and every move from here could be the one that topples it all. History may not repeat itself exactly, but right now, it's sounding an awful lot like déjà vu. Are we standing at the edge of the next great collapse? Stick around as we dive into clips from Larry Lepard's eye-opening interview. Don't just scroll past. This information could impact your financial future. Hit that subscribe button, smash the like, and turn on notifications so you don't miss a single update. Drop a comment with your thoughts. Are we on the brink, or is there still time to course correct? Share this video with someone who needs to hear the truth behind the headlines. Let's go back to the interview.
What's going on with tariffs?
Yeah, okay, so let's start there. So, look, Trump is a disruptor, and the tariffs are not. It's not black and white, all good or all bad. As I think you and I both know, and most Bitcoiners would agree, the system we've got set up as designed, the dollar reserve currency system, Bretton Woods post World War II, now run by massive Keynesians, is flawed. Triffin's dilemma is real. Yep. We've hollowed out our manufacturing base. We have to export everything or import everything because we don't make stuff anymore. And, what's that done? It's caused a lot of financialization. Wall Street's done great. Main Street's done terrible. Yeah. Trump won the election because he recognized that and he catered to that, and he wants to make America great again. And that really means make America great for all of America, which is not just the top 1% or the top 10%. And he's a part of that, but he's actually a populist, as you know. And that's why he won the election. And so I think, and he brought in a Treasury Secretary, we all know, Scott Bessent, the hedge fund manager who, ran the speculative attack on the pound when he worked for Soros and obviously understands, economics, money flows, macro, et cetera. And they decided that they were going to be very aggressive about trying to make the changes that are necessary to get us away from the system we've been on into a new system. Now, whether tariffs are the perfect solution to that, it's unclear. I mean, I'm mixed on these tariffs. I mean, I think I'm not mixed on the notion of trying to return America to, to get to a neutral reserve currency and get rid of this dollar-based system and, the globalization that we've had that's hurt America and really hurt a lot of the world. So, somebody needed to do something. And of course, the way he did it, I mean, it's like he threw a grenade into the party, right?
Totally.
I mean, he came out, with this, I mean, I could argue that his approach, I would have taken a different approach. I would have done an Oval Office speech. I would have explained it much more clearly.
Yeah.
I think the poster boards with the pseudo tariffs that other countries were charging us, the numbers were, I mean, to the best of my when I look at them, I think they're kind of almost made up. I mean, they weren't really what the actual tariff that other countries, it was a formula based on what they perceived to be currency manipulation combined with the trade deficit. The immediate impact of the tariffs was the stock market had a heart attack.
Yeah.
And rightly so, in my view. And first of all, I believe the stock market's a bubble. I mean, if you go to any of the John Hussman numbers on valuation, I mean, this is way, way out of line, the stock market. And it has been for a long time. That's all because of the cheap money that we had, ZERP from 08 to 15 and from 19 to 22. Mm-hmm. Money was free. And a lot of it, people were involved in carry trades where they, borrow money and invest in the stock market. And so I haven't seen value in the stock market for years. And in the book, I actually talk about how I think the stock market is heading towards an accident. And I do. And I think we've just started it. And if I'm correct that it's a bubble, history shows that bubbles don't just deflate gradually. They tend to go quite a ways pretty quickly, and they can be violent. Who owns stocks? I mean, and Bassett said this in his recent. I mean, everyone should watch his recent interview with Tucker Carlson, right? He said, 84% of the stocks are owned by the top 10% of the country. So what he did was he just took a whack at the top 10% of the country. I mean, the bottom 50% didn't get hurt with this market decline. They don't own stocks. Yeah. Now, they may get hurt in the fallout if we have a big recession / depression and then people start losing their jobs. Mm-hmm. That's going to hurt the bottom 50%. But the initial part of it is, and Bassett said it, Wall Street's not going to do as well. Main Street's going to do better. And so they took a big whack at Wall Street by doing this. And as you can see, a lot of Wall Streeters are crying. I mean, Ackman came out and was bitching like he always does. And, there were others as well saying this is terrible policy. And, one could make that argument. I hear it, but I'm kind of like, we need disruption. The system's broken. We need disruption. So on balance, I'm with him. But anyway, the stock market went down, and by the way, as we talked about earlier, the net effect that was also positive, bond market rallied.
Yeah.
And Bassett has said many times that one of his key, indicators is he wants to get the 10-year rate down, and he's got a wall of maturities he's got to roll over. He's got $7 trillion plus coming due this year. And, he needs lower rates to do that. And he criticized Yellen for not terming it out. And then, of course, he didn't term it out. And I think he can't term it out because there's not much demand for it, is my sense. And by the way, what he doesn't mention is that these tariffs aren't exactly going to make a lot of people love us and think, oh, well, I'll keep buying those bonds. Mm-hmm. I mean, so
why do bonds perform well here? Is it because people are just looking for safety? So that's where money goes?
A little bit. And it's the reflexive historical trade stocks and bonds is when you're going into a recession, you buy the bonds.
Okay.
Right. If you're going into a recession, business is going to turn down. Things aren't going to earn as much money. Stocks are going to perform poorly because of the downturn in earnings. And therefore you want earnings that are reliable, and bonds provide you with reliable earnings. So it's very typical. Market gets hit. The people who are sellers, they take that money and go to the safe haven of bonds. That's a very long historical pattern. However, it's been broken in the past. And this is the thing we got to watch. We got to watch the rate on the 10-year. I mean, it went from mid 4s, 4.344, down to just under 4. I think it was 3.89 or 3.9 something earlier, right after the big whack in the stock market last week. But now it's started to go back up again. And that's not good. And that can't have Bassett being happy. And so if the bond market starts to fall apart and interest rates start to go higher, then the plan of whacking stocks to help bonds is not working. And I think that's what's going to happen because I think this is a sovereign debt crisis. And in sovereign debt crises, people don't want to own the currency at all. They want to own the alternatives to the currency, which are gold and Bitcoin. Which is why, by the way, I mean, even though gold got whacked on this whole downturn, it's still very close to record numbers.
Yeah.
And Bitcoin's not that far off its all-time high, and we're a lot higher than we were a year ago.
Trump's explosive new tariffs aren't just about trade. They're a direct hit on America's already crumbling financial system. Markets are in turmoil, stocks plunged, and Wall Street elites cried foul. But here's the truth. 84% of all equities are owned by the top 10%. Main Street barely flinched. Bonds spiked, then yields crept back up, a flashing warning sign of a deeper debt crisis on the horizon. Meanwhile, gold and Bitcoin are holding firm, showing surprising strength as the chaos unfolds. This isn't just policy, it's a high-stakes economic reset. Will Trump's push for reshoring and deregulation spark a revival or unleash financial chaos? Either way, the old rules are falling apart. America is walking an economic tightrope, skyrocketing deficits, a fragile job market, a tax base built on inflated stock prices. If the markets crash, the fallout could be massive. And yet, amid the uncertainty, Bitcoin is quietly proving its role as a digital safe haven, still tethered, but showing signs of breaking free. What we're witnessing is bigger than one presidency. It's the unraveling of a financial system that's long been unsustainable. Gold and crypto aren't just assets anymore. They're signals of deeper systemic distrust. Revival or collapse, either way, the old order is dying. And what comes next could redefine everything. Stay informed. Don't just watch, understand what's coming. Like this video, subscribe, and hit the bell so you don't miss the next phase of this unfolding crisis. Drop your thoughts below. Is Trump forcing a reset or setting the stage for disaster? Share this with someone who thinks the economy is just fine. Let's dive into more from the interview. This is just the beginning.
And at least initially, Bitcoin seemed to perform quite well compared to everything else. Like, it's obviously crashed a little bit since. Do you think, I mean, the word decoupling has been kind of everywhere,
Yeah, I know.
which is, I think, a bit cringe because it's way too early to say that that's the case. But do you think there is a chance that this is like a big decoupling event?
Yeah, I wouldn't call it decoupling. I would call it just, there's a trend away from the perfect correlation between Bitcoin as a liquidity indicator and the NASDAQ. And so I think, and what will happen, and what I think will happen is that, I mean, I think that it will become clear that Bitcoin actually is part of the safe haven bid.
Yeah.
I mean, they're two buyers of Bitcoin. The guys like you and me that buy it because it's digital gold. And we're going to hold it for a long time. And we're there because there's monetary debasement. Okay.
Yeah.
There are other guys who are buying it based on liquidity flows, who are crypto bros and everybody else. It's like, you know, this is the triple Q on steroids. And when the triple Q goes up, this thing goes up. And so I'm buying it because it's got a lot of zip in it. But those are casual buyers. They're renting it. They're not really buying it longer term.
For sure.
And when things go the wrong way, they're out.
Yeah.
And so, you know, what happened more recently, last couple of days, I mean, in a real liquidity event, and one could argue that we may be close to one. And I don't want to be a panic monger or fear monger. This could all calm down. Everything could be fine in 2 months. Okay. But it could also go the other way and get worse. And if it goes the other way and gets worse, what will happen, in my view, is, you know, we will trend towards what I call, you know, a liquidity event or a credit event where all correlations go to 1. And let's just look at the last one of those. The last one of those was COVID. Okay. So when COVID came along, you know, the stock market basically went down. Well, it went down 32% before Powell came in with the big guns. But before that, it was down about 20% and he started cutting rates. And that didn't work. Then it went down further. And for a while, actually, in the early part of COVID, and I document this in the book, in the early part of COVID, gold actually traded up. It's a safe haven bid. Okay. And bonds actually did well too. They traded up. Okay. Safe haven bid. At the last part of COVID, when it was really intense, you know, when the market was plunging, gold was down, Bitcoin was down, the market, I mean, there was no place to hide.
Yeah.
There was just, I mean, everybody, and what happened is, you know, when in that kind of an event, what happens is you don't sell what you want to sell, you sell what you have to sell. The whole notion that we're going to reshore I mean, it took 50 years for the system to get this effed up. Okay. And, you know, we're not going to reshore all that in one presidential term, right? I mean, there's just no chance. And there's no American who's going to sit here and assemble iPhones for, you know, $5 a day. That's just not, and we don't want them to.
No.
And I don't want to have a $3,000 iPhone. So, you know, I mean, again, I think I'm glad they're trying to disrupt and take us in the right direction. But the notion that we can quickly solve this problem is a fantasy.
Yes.
Just like Doge was a fantasy. I mean, Doge is a good thing. It's going in the right direction. But, you know, we've got a gaping 2-point-something trillion deficit. And, you know, Gunlack was saying yesterday on CNBC, he thinks maybe Doge has saved $100 billion a year.
Yeah.
Okay. Well, that's 2.2 100, we got a ways to go. I think it is. Sadly, I think it is going to be a Trump issue. And further sadly, if, look, what they're hoping is that the deregulation and AI and productivity improvements and a lot of the good things that they're doing, bringing onshoring, bringing jobs back here, bringing businesses back here, they're hoping that all of that will kick in to offset the effect of a declining stock market. I mean, let's just go through a declining stock market, what it means. And I don't think the average person necessarily thinks about this, but we're running a 6 or 7% budget deficit right now. Mm-hmm. That's with full employment and, in theory, a reasonably healthy economy. Okay. In the last two big downturns, 2008 and 2000, the deficit went up between 6 and 9% of total GDP. So, and like California, it's been shown that, a big part of California's budget, when the stock market goes down, the California, state really doesn't, their budget becomes a mess because they make so much money off capital gains taxes for all the tech entrepreneurs that live there. Yeah. And that's true in the United States too. And I don't know the exact percentage. I wish somebody has it, send it to me, but some meaningful percentage of U.S. federal income taxes are based on capital gains and stock gains. Mm-hmm. Well, you don't have those when your stock market goes down 40%. And so the other thing that happens is unemployment goes up. And so you've got unemployment insurance, you've got bigger food stamps, you've got all the social spending increases when you have a downturn. And so the combination of those two things, okay, so DOGE maybe cuts a couple $100 million, but those two things are going to shove it up the real wrong way. Totally. Putting it, into a bigger fiscal doom loop, right? So it's, sadly, this thing is so damn broken. And Trump got handed such a bag of shit. Mm-hmm. Do you know what I mean? That I don't think Jesus Christ himself could fix this thing. I just don't. I think the damn thing is broken. And what I'm terrified of is that it's going to be broken enough that, in 4 years, the blue team will win because, the voter not fully understanding everything that's going on, tends to think, if you look at a series of elections here, what have the voters done? They've thrown the bum out. Yeah. Do you know what I mean? There hasn't been a 2-term president for a while. I think it was since Obama, right? Mm-hmm. So, my sense is if things don't get better in 4 years, they're going to throw them out and we're going to go, massively socialist.
Bitcoin just dropped over 2% and traders are rattled. The cause? Mixed signals from Trump on China tariffs. While altcoins bled out across the board, confusion from the White House added fuel to the fire. One moment, electronics imports were safe. The next, nobody is getting off the hook, Trump posted on Truth Social, confirming existing 20% national security tariffs still apply. Crypto markets buckled. While Nasdaq futures bounced back, Bitcoin hovered near its critical $83,000 support, revealing a widening split between crypto and traditional tech stocks. As Larry Lepard put it, Bitcoin's correlation to the Nasdaq is fraying. It's not a full decoupling, but a shift. Speculative asset? Safe haven? Maybe both. Day traders still treat Bitcoin like a leveraged tech play, but long-term holders? They're stacking sats like it's digital gold, bracing for a storm of tariffs, debt, and inflation. Still, let's be clear, liquidity is the lifeblood of all markets. If that dries up, just like in March 2020, even Bitcoin could face brutal forced selling. And the pressure's not letting up. Trump's trade war is escalating fast. Commerce Secretary Lutnick just announced more sector-specific tariffs are coming in under 60 days. Analysts warn this could delay any Fed rate cuts, putting risk assets in the crosshairs. So while Bitcoin's drop today looks tactical, not structural, the real test is coming. As Lepard warns, in a true crisis, all correlations snap to 1. So the real question isn't if Bitcoin decouples from the market, it's, can it survive the storm as capital scrambles toward harder assets? Is it gold or Bitcoin that offers the ultimate hedge against the coming fiscal doom loop? Drop your take in the comments. Share this video with someone who thinks crypto's just hype. Smash the like button to boost this message. And make sure you subscribe and turn on notifications so you never miss what's next. Thanks for watching. The next move could change everything.